So this morning there's some really interesting news, not interesting news, everybody saw it coming. Tesla decided to cut their prices for their electric cars. Interesting because it's now under what dealers are buying and selling these cars for. So just food for thought, the wholesale network are selling these Tesla Model Y in particular, we'll talk with Model Y. They're trading between each other for $79,000 to $81,000. And Tesla just cuts the price down to $69,000 on their new site. So you could buy new cars, brand new cars sitting here. The event's already been happening. Like I said, like about a month ago, their inventory skyrocketed. There's so many cars sitting in their lots.
Let's take a step back first.
Okay.
So, like, we're basically in the beginning of January of 2023.
Yeah, it's the beginning of January 2023, but it stems pretty deep actually. So we actually have to start the conversation talking over the last 2 years, and specifically with electric cars. Like over the last 2 years, electric cars experienced a skyrocketing amount of demand because of low interest rates. So people are buying up these cars, and they were cheap, and meanwhile gas prices were going up at the same time. So there was a lot of incentive for people to switch over to electric cars. They figured it out, it's a good time. At that exact same moment, because of COVID, we experienced like a supply chain disruption, which led to increased pricing for those cars, right? And then a very delayed entry for a lot of manufacturers to make electric cars. So you get the talks about like Mercedes-Benz entering the electric car, BMW entering electric cars. They're pretty late to the game, pretty much. Tesla took a really dominant position for electric cars. That's why they experienced explosive growth over the last 2 years, right? And their organization, their business model is designed in such a better method, I would say, compared to other manufacturers, because they had reports, literally, they were able to determine increasing pricing. They were able to increase prices of their Tesla to adjust to market demand based on supply pricing at the current moment, which was very interesting. Not a lot of manufacturers could do that today. Like basically the company is so slimmed down, it's very technologically forward actually. Like if you had to compare it to like Toyota or something, generally a manufacturer waits till their purchaser report comes back. Basically it might take a month or two, and then the report comes in saying, hey, these prices came up, and then they have to go through a huge bureaucracy of adjusting pricing to reflect their increased costs. Meanwhile, Tesla is like, nope, right away, we just do it, right away, just do it right head on a hammer. But what this actually led to is a big speculative market. A lot of people got into buying Teslas and flipping Teslas. Like it became really big. Like Teslas before 2019, remember, it was a $35,000. Now it was like a Model 3 during the peak was like 60 grand. And then Tesla was, because it was stemmed up by Tesla increasing the prices, and then you had these speculators who were jumping into it saying, hey, supply lane, all that story. Cheap interest rates also added.
So at its peak, how much did it end up costing?
Well, it depends. The Model 3, Model Y, Model X, Model S, it varies on those things. But you could expect it was dramatically a big increase overall. It's like on average, I think it's like 20 to 30K from base back pre-COVID. And then it got bad to the point where you have to also remember that government also gave credits for these cars back in the day. Not anymore now because they're too expensive. But here's the big news. So over these years, people who were coming out with new electric cars were doing it in comparison to Tesla. So Tesla kind of set the standard for what electric cars were. So if you notice, the electric cars like the Ioniq 5, the ID4, when they came out, they were about like 50K or so. But at that moment, the Model 3 was already 60 grand. And then anybody with a bat's eye could immediately say, yo, those cars are gonna go up in price too, because Teslas are selling for this much, and these electric cars from the Korean brands, they're cheap. Entry levels like the ID4, Volkswagen entry levels, they were priced at 40K, basically priced back in 2019. They didn't really think to adjust it like the Tesla at the moment, because Tesla was adjusting upwards. So these guys came out, they were late adjusting their pricing. So guess what happened? You get a bunch of speculators who are buying these cars and flipping them for like 30K above MSRP. I'll give you a good example. We picked up an ID4 back in the time, like an ID4 Pro, 2021. We picked that up for like about 53K. I sold it for $88,000 to a dealer. And that dealer took it and sold it out to someone else. So just an example of how the delay action of the manufacturers literally missed out on a lot of stuff. Tesla was setting up the grounds. But today it's completely different. With the interest rate hiking continuing, people's affordability has gotten a little bit worse, right? So what we just got the last 2-3 months was major price cuts. Like as quickly as Tesla increased their price, they're as quickly cutting down their price. But of course, I have to, with disclaimer, say even though today's Tesla price, like this with this morning's cut, is substantially lower than it was 3 months ago, it's still higher than if you were to buy in March in 2021. It's still slightly higher. Okay, so here's an example. Let's just go with it. With the Model Y example. So 3 months, 4 months ago, while interest rates were low, so that car was exchanging for about 82 to 83K. And then it slowly died down because, well, market conditions slowed down, and they bursted with inventory. Because essentially what really happened was the speculators, it was done. The speculators were done. They only cost you $150 to speculate on this game. You put down $150, you get a Tesla coming in, you flip it for $5,000. Who wouldn't do that back in the time while Tesla was increasing prices? But now Tesla is noting issues of delivery. So people weren't taking their vehicles anymore, especially coming into the new year. So Tesla did something a little bit drastic. This relates a lot to the US market, but well, I'll relate that a little bit. With the Tesla market, they cut $5,000 in the month of December before New Year's. They cut a quick price of $5,000 off their markets. So what you got were Teslas that were originally trading for $82,000 brand new. They cut it down to about $74,000 to $76,000, which is a drastic cut. What that did is actually attracted a lot of people to quickly go in and try to buy Teslas. But the wholesale market couldn't adjust that quickly. And now it's like, and then some people already had the good mindset, like, yo, this is gonna continue, right? Because like nobody's gonna buy a Tesla after the price cuts. Yeah, and then they went back to normal. And then what happened was this morning, and then where they announced a surprised additional rate cut. So a Model Y dropped from 74K to 69K. It's an economic movement. So basically, when interest rates are low, people start buying higher, more expensive cars, right? they think they could afford more, which is true. Low interest rates stimulate growth. In the market of the electric cars, it's different from the auto industry in a sense. Tesla is smart in what they did. So they were able to adjust their business model, as we said, to reflect on the market demand and price really quickly. Not a lot of manufacturers were able to do that at the speed that Tesla did. So as Tesla's ramping up their electric car prices continuously up and up, they were pretty much setting the floor levels for electric cars coming in. And then you got a lot of new cars, like new manufacturers entering this field, which is the ID4 from the Hyundai, the EV6 from the Kia. A lot of different brands were trying to get into it, but they weren't as price efficient as Tesla. So Tesla kept increasing their prices and to reflect market demand, which is amazing. Tesla made a lot of money off of that. And side note, very sad to say, a lot of people probably lost a lot of money on that too, because we're buying these cars at higher prices, but market demand, huh? Wait. But okay, so with Tesla starting to cut down prices, it's actually a very interesting sign what's going on here. A lot of people might say that's a bad thing. It's like, oh, they're cutting prices, that means nobody wants their car. They're very reacting to the economy very well. Like they're deflating. So I would say, like even though Tesla has started cutting down the prices, to reflect the market demand situation, because they have hundreds of cars stuck in their port lots now. Registrations are like all-time low, was noted. So not a lot of people are registering their new Teslas. So that's how they indicate the market demand. And there's a lot of them. You could actually go to the website now to buy a new Tesla for cheaper than what the wholesale market deals with this car. I'll link to reasons for that in a bit, okay? So, as note, Tesla basically set forth a speculative market. A lot of dealers got in on this because, yeah, it's a lot of money to be made, really. Like as Tesla's increasing prices, you put down $150 for your deposit, you get your car arrived, you sell that sucker. Oh, quite a bit of money right there. $150 comes back $5,000. That's a lot of money, and not a joke. A lot of dealers got into that too. And then because why? They really saw a lot of demand. But this is also particularly one problem because they're reacting to the market rather than anticipating the market. So right now, I'll admit, a lot of dealers probably got their pants caught on fire by this surprise, really not really so surprising, but technically a surprise for dealers, price cut. Like I'll tell you this, on the wholesale market right now, for just a Model Y, the last 2 days, I saw probably 4 or 5 Teslas exchange price around $79,000. That's MSRP because they figure there's still demand for Teslas at MSRP. Yeah, well, they're probably kicking themselves seeing this morning where it's got down to 69K. They're like, oh my God, you could buy a brand new one 69K. We were trading this car for 79. That's a lot of pain for them. So
that's on the dealer side.
That's on the dealer side.
The people who are speculating.
Yes.
On the side for just regular consumers, this would be great news, though, right? Like new consumers, not people who have just recently purchased.
Yes. But it's also, this is the end where a lot of people like it or hate it, Elon Musk situation. This is really a love and hate it situation. He is doing the right thing. He is reacting the market. But as a consumer, you hate it that you just bought this car at this price. Like, I don't know if they're going to come up with any reimbursements or anything, but all I know is China, Tesla China, after the rate cuts, after the price cuts, they're protesting. And like the cut here, you think it's drastic. It's like, holy crap, that's a big cut. From 79 dropped to 69K, you could buy one. Yeah, in China, a Model Y is 50K Canadian. That's cheap. That's really cheap. That's like, oh wow. Yeah, that's like that probably did scare most of the world, seeing the ability of Tesla being able to cut a car price in a flick of a finger. Normally, manufacturers can never do that. It takes they go through a ton of bureaucracy to even consider price cuts. They always only increase price. That's what it is. Like, or else who would ever buy their new product, right? Like, who would buy their old product? They would literally kill their own field, right? So the whole Tesla situation that just happened this morning was a very interesting play. And I'll straight up admit a couple things. Like, sure, the investors, everyone is going to get hurt, but I would say, like, even Tesla would self-admit, nobody would, like, Tesla is not an exotic car. It's not at all a luxury car. Like, even Tesla themselves will admit that. But yet, they're trading for, like, exotic car, like, luxury car prices. Like a Tesla Model 3 is exchanging like it was a C-Class, it was like a top-end C-Class Mercedes-Benz. But it has nowhere near that build quality. Like, ask anyone who has a Tesla, they'll admit that. They're like, yeah, the car is very convenient, but quality control still needs a bit of work on quality control, and Tesla admits that. But what Tesla strived for, their actual mission statement, ironically, was just to make an affordable car. It became unaffordable because they were able to react to market demands and constraints. They're acting proper, and now they're like, oh, okay, time's come. We're going to start price cutting, and this like as they're price cutting, it's a good play because they proved another thing during the last 2 years, that electric cars have a bigger margin than ICE cars. ICE cars are internal combustion engines, like your traditional cars, and definitely compared to hybrid cars. They proved like you could have a pretty strong margin because the parts have become so simplified. Imagine if you're tooling a factory that makes an engine. You know how different each engine is, the molds for each of these, how difficult it is. Tesla just makes battery packs, mushes it. I'm simplifying it, but it's much more simple process than actually building an ICE car.
So do you think with these price cuts that just happened, they're actually going back to their original thesis of just making a more affordable car?
Yeah, most definitely. It's not just even that. If you consider the economics of it, they're doing the proper thing. In a time of recession, it's rather than focusing on profiting, they would rather focus on utility, or in their sense, utility and winning market share.
But that's what's going to provide longevity.
Yes, so they are trying to win market share by making their cars cheaper. They'll definitely establish market share. Imagine the ICE cars, like the cars now, like all these cars that got souped up in price over the last 2 years. Over the last 2 years, all these car prices were going skyrocketing high because of market demand and all that stuff. But now, because Tesla started cutting down the prices, people are going to start comparing the Tesla price compared to the market price. They're going to start going into Teslas again. I wouldn't say much on anything else, but that is a side factor. It's some good news, but it's difficult news to swallow if you're an investor. I would say that. Because like Tesla's cutting their margins. In the long term of it, it's a good move on Tesla. Crappy move for investors and speculators, but honestly, in this type of market, you speculate, you take risk. That's what you get.
How would you wrap this all up then?
I'll wrap it up saying, yeah, Tesla cars adjusted, prices are coming down. Tesla cars will act like a similar base for all the other cars. So keep an eye on Tesla. I have strong suspicion that they're going to keep cutting, but yeah, just keep an eye out. They're going to keep cutting their rates, and yeah, they're going to try to win market share now rather than focus on pure profit. So that's a good news. Just food for thought.
All right, let's leave it off there.
Yeah, leave it off there. Yep.